The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back. Another episode of the Apartment Gurus podcast coming at you right now. Super excited today. I've got the man in red or fuchsia, or what would you call that color jacket, Scott?
One stop sign red.
Stop sign red. Okay. Perfect. He, if you're watching on YouTube, he's got a very noticeable and memorable jacket on, stop sign red, as he says, and become his trademark throughout the industry. His promotional materials and everything, he's wearing it. So that's one way to remember Scott. But Scott, more importantly, is a guru in the real estate space. Not just multifamily, but also self-storage, industrial, some mixed use stuff, commercial warehouse, and even single family stuff. And so very broad range of expertise. But he got to start in the apartment multifamily space, and he's zooming in today from Chicago, where he's a native of Chicago, and he started in architecture, pursuing his master's of architecture from Illinois Institute of Technology. And while he was doing that, he worked as project manager for Optima Incorporated, which Optima is a development firm. Am I right about that, Scott?
They did development, architecture, and contracting. So we did all
there
three
you go.
things there.
So, so he did some big projects there, some 400 unit, 40 unit. So a lot of experience there while he was getting his degree, which is super valuable. And then in 2012, Scott founded CODA Management Group, which is a firm that specializes in managing real estate assets. And they manage a wide range of real estate, going through all the asset classes I mentioned, the single, multi, retail, commercial, self-storage, et cetera. And he's an author. He wrote a book about green technology for your home, which is one of my passions in life and in the real estate world, is just being more friendly to the earth and doing things that we can to make that happen. He also founded a revolutionary storage business, the one-stop self-storage, and its brand is built on the premise of providing the best in storage solutions contained in sustainable, renewable construction, and is in Wisconsin, Ohio, Kentucky. Ohio is my original stomping grounds, and also throughout the Midwest and other metropolitans, soon to be Louisville, Milwaukee, Toledo. And most recently, he founded Store, which allows crypto investors to invest in storage, which is super cool, and allows consumers to rent storage via crypto coin, right? And he resides in Wilmette, Illinois. He's got a wife and 3 children. So Scott, super stoked to have you on the Apartment Gurus, and looking forward to hearing all about you and how you've been able to do what you do.
Thanks for having me. I appreciate the opportunity.
Yeah, you bet. So before we kind of dive into what you do and you've got really a pretty broad range of expertise that we can talk about, and we'll focus mostly on multifamily, but tell us a little bit more about kind of your path professionally, and going from, being an architecture student to writing books and, getting in using crypto and innovating that into the space. That's super exciting. Like, how did that whole story go for you?
Well, I think that the whole story goes from always wanting to create a setting of learning and growing. So it began, when I was graduated from college. I recognized I needed to go and get a master's degree. But while in that, I became a TA for my professor, who was a developer, architect, and contractor. He was the owner of Optima. And I saw that as an opportunity to learn the business. And so, while others poo-pooed it because he was compromising the academic integrity of the school, I saw it as an opportunity. Like, why would I not want to learn what I'm supposed to be doing? I see this as an opportunity for me to, one, get my part of my education paid for, but then two, I'm learning the business. I'm learning the foundation of what I am, what I'm going to be doing for the rest of my life, or what I want to do. So, that translated in constantly seeking out opportunities to learn. So, when you start your own company at 28, you might think that you know it all. And that's probably a little bit of the ignorance or arrogance to think that you can start your own company at 28 years old. But I also recognized that at that point in time that I still need to be able to be in a situation where I was continuously learning. And so that's why, my second mentor, is the president of a university and owns, 3 major corporations. So, I was like, those business things that I learned from him have been really setting the foundation and, helping me launch and continue to grow and develop our company.
Nice. So mentorship, it sounds like, has just been so key for you along the way, huh?
I would say both mentorship as well as seeking out intentional products, people, different things. Like, I just finished a 2.5-year program on leadership. And so that was another component of what we're doing. So that wasn't necessarily a mentorship, but that was like an educational thing, how I could become a better leader. And that was a 2.5-year program. So I'm constantly investing in ways in which for me to grow.
Yeah. Yeah. And I mean, you've been at it for a while and you've had a lot of success, and, a lot of people would kind of rest on their laurels and run the businesses. But you seem to be a lot like me, to be honest, where you're kind of just seeking expansion and growth throughout life. And, that's, to me, those are the Elon Musks of the world, right? That just do it for the passion of learning and growing.
Well, I will say this is probably only the second time in my life I've been compared to Elon Musk. So my cousin-in-law, his son, is convinced I look like Elon Musk.
You do look a little like Elon Musk, I got to say, yeah.
And every time I see him, he's like, laughing under his breath and says, "See, Dad?" Yeah. But thank you for that second comparison.
You're welcome. You're welcome. So focusing in on just in multifamily for a second, what was your start in that? Was that through Optima as well, or how did you get specifically into that space?
So that my professor, who I was the TA for, he was a developer of multifamily. They were a top 20 real estate development company in the country at that point in time. And so when we were starting the year, he's like, "We're going to take the Sara Lee factory on 50 acres and we're going to design apartments and we're going to build apartments there." So, part of my job as the TA was preparing this project for everyone in class. There was 50 students, of which I was one of them. And then on top of that, he said, we want 1,000 apartments. And so we all began designing, and he took my concept and began refining that. And then we were actually presenting that to the city to get it approved, and went from 1,000 condominiums down to 316 condos, 64 townhomes, and 16 single family homes. So, we were working on that project. The entire 6 years I was at Optima, we were working on that project. So 3 while I was in graduate school and then 3 after I graduated. But then I also was working on 2 other new developments, and then also conversions of apartments to condos during that period of time. Mm-hmm. So there was my whole background for those first 6 years was solely multifamily.
Got it.
And then when I started my own company, we were began in single family, but then we quickly got into multifamily and mixed use again, just being, in my blood and heritage and such.
Yeah. To me, for listeners, like a takeaway here is, and we've talked about it a lot on the show, but not a whole lot recently. And that is being able to work in the industry, either in a paid position for somebody else that's doing big things that are, that you want to be doing eventually. Or in Scott's case, this was a pretty unique educational scenario that you had going on there. And did you get a job with Optima right away? Was it an internship, or how did that go?
This is my first real estate negotiations. They said, as my TA, that means you have to work in my office for free. And I said, well, my TA ship is only 20 hours. So after 20 hours, then you have to pay me. He goes, okay, fine. So from 7 a.m. until noon, I worked in the office. And since I was the only student that didn't have an undergraduate in architecture, he put me on the development side. So I was running all the financial models for what we were doing. Mm-hmm. Then from 12 to 1, I would drive to class and eat lunch. Then from 1 to 6, I was in class. And most of the time in his class, which was like from 2 to 6. And we were drawing that whole time, 3 days a week. And then I'd go home from 6 to 7. I'd drive home and eat dinner. And then from 7 until midnight, I was working on his drawings again. Mm-hmm. So basically from 7 a.m. until midnight, I was working for him for, the 3 years I was in graduate school. Yeah. And then when school was out on breaks, then I worked in his office from, 7 a.m. till, 7 o'clock at night.
Yeah. Yeah. So again, just to highlight the point, right? Like being able to work in the industry under somebody that you like and trust, and that's bringing you along for the ride as far as the education goes, whether that's paid, whether that's some sort of working internship that's part of your education, or you're just working for free for somebody for a while, like whether that's a developer, in this case, architect / developer, and a property manager, a lender, there's so many different facets of the business that you can learn on the job, right? You can learn the whole business by being a paid part of the business. And it's a wonderful way of getting started. When people ask how to get started in this industry, that's one of maybe 3 or 4 different ways that I suggest, depending on a person's situation. If you have the ability to work for somebody, that could be a syndicator, capital raiser, et cetera, like consider that. It's really, really wonderful way of getting involved, and getting paid ideally while you're learning. So yeah, that's awesome, Scott. So, okay. So take us from that point. Well, I guess first of all, when you started your own business, you were 28. What was that like? And how did you get the inspiration to do that? Was that something you kind of always knew you wanted to do, or how did that all come about?
Well, after I left Optima, the chief financial officer started his own company with 2 brothers, and they were doing a 90 unit townhome development, which was supposed to make around $3 million. And they brought me in to facilitate the whole thing. So the CFO was obviously in charge of the financing. One brother was in charge of sales, and the other one was in charge of construction. But the 3 of them weren't talking. Oh. They were talking, but they weren't communicating, right? Mm. And so the one guy was making didn't translate into the assumptions of the second guy, and the third guy, they each had their own assumptions. And so when they brought me in, my first job was to take all these different assumptions and put them into a pro forma and model it all out, because I just did modeling for this $100 million project. And so when I put together for this 90 unit one, I went up to them and I said, how much money is this thing supposed to make? And they said $3 million. And I said, well, based upon these modelings, you're going to lose $500,000. And it was, computers started getting ripped off desks. I mean, put in, locked offices, all these sorts of things. And I'm like, what did I, I've been here a month. I just left a top 20 developer company in the country. And now I'm like at a company that's not going to last like 2 months. And so, shortly thereafter, I came back to them and said, hey, look, you guys really can't afford me, but you can't afford me to leave either. So what if I start working part-time for you, and this will give me the opportunity to start part-time for myself? And that's when we went out and bought a property, tore it down and built a single family house and sold it. And so that's how we got going.
And what was the name of your company or at that point, or is it still around?
It was still CODA. It was CODA.
Yeah. Okay, cool. Was that scary for you? 28 in a lot of ways is young, but you had so much experience at that point. Was it a scary experience? Was, exciting? How did that all look? Well,
you don't know what you don't know, right? So you look back at the level of risk and you're like, maybe I should have been scared, but I was probably more along the lines of arrogant and ignorant in the sense that, of course I can do this. Why would I not be able to do this? Right. I've been doing this for 7 years for other people. Why can't I do it for myself? I know what goes into this, but there's certainly a lot of risks that you don't necessarily take into consideration. This is when the housing market was just booming. So it was pretty easy to make money in these things. And that's why we were flipping homes every 2 years, my wife and I. And so, of course I thought I could, do it all. And, when you hit these, milestones or recessions, first the internet bubble and then 9/11 and then the housing, market, at that point in time, after your third or fourth recession, you're like, okay, I got to make sure that I know how to make our business survive.
Yeah. Yeah. So you had, to me, a very entrepreneurial, spirit about you in terms of like, of course I can do this. That's that audacity that most of us share as entrepreneurs, and that belief in ourselves and our that confidence. But really well said on, you don't know what you don't know. And like it probably for every entrepreneur looking back, if they knew what they didn't know at the time of starting the business, they probably would have gotten stunted, because there's so much you run into that you just don't see coming. And you just got to pivot and deal and get resourceful and do all the things it takes to survive. Just because you brought it up and because we are in some sort of, economic change or downturn or recession, if you will.
Oh, you used the R word. You were brave enough to use the R word.
Well, I don't know. I'm not an economist at all, but I don't know that we're there yet, but who knows? What have you found is like important on the how to build a business that does survive stuff like that in real estate?
Well, that's the reason why we pivoted into self-storage. I mean, I remember when I was driving with the owner of Optima, and we were passing the site, and you're familiar with Sara Lee?
Oh yeah, the food company. Yeah. So
it was this big industrial factory on this site in 50 acres, and as we're driving by, and I said, 1,000 units. That's a lot of risk. They're going to take a long time to fill that up. And he looked at me and goes, I can't tell you how much risk it is. It's an unbelievable amount of risk. And so as we're going through this, I was thinking, like, where are 1,000 people going to come to buy these things? I grew up around that neighborhood. I was like, do we really need 1,000 new homes here? These are the things that were going through my head. I'm like, where's this market going to come from? And when we started getting into self-storage, we recognized that it's a very predictable business. We can analyze this business. We can understand supply and demand a whole heck of a lot easier than we can any other product. So when we look at a market and we see that the square foot of lockers per capita is defined, we can identify if like we should go into a market and not go into a market. We can see like where that pattern is. We can see what the absorption, the velocity. These are all things that are very much we can analyze within self-storage, which I can't do in any other industry within real estate. And so when I began looking back at the recessions, and in 79, and then, the internet, the housing, the internet crash, and then 9/11, and then the housing market. In each of those markets, self-storage went down occupancy by like 1 or 2%, and then rebounded 3 or 4%. Every single recessionary market slowed down slightly and then went up, and it's been increasing ever since. And only 10% of the population at that point in time was using self-storage. Some predict that it's up around 20% right now. So it's an incredibly untapped market. And so when I was looking at all these factors, I was like, a lot of people called it recessionary proof. With my experience in real estate, there is no thing that you can prove within real estate because it will turn around and snap you right in the butt, right? I deemed it recessionary resistant. It resists recessions better than any other product in the marketplace. And so that's what really attracted me. And if we compare it, it's apartments without toilets. I've worked on $14 million homes and I worked on $100,000 townhomes. And the only difference is how much stuff we put into these boxes. They're just, how extravagant these boxes are, right? And to me, self-storage is no different. I'm renting a box. The box doesn't have anything in it, but I'm renting a box. So, it's the same sort of concepts, but it is much more of a retail business than the other forms of real estate.
Yeah, it sounds like, and I have not delved into self-storage myself. We definitely am a believer in, at least while you're getting going and building your business, building your portfolios, I'm a believer in staying in your lane. And I get shiny object syndrome too, and I get it. But it sounds to me, based on what you said, it's just way more technically like predictable, underwritable. Like it's just kind of more of a formulaic, mathematical analysis, if you will. How does it differ from like when you introduce tenants and toilets and trash and all that stuff? What like less predictable variables get introduced at that point?
What are less predictable variables compared to
and I guess what I'm getting at is, you did a really good job of kind of explaining how, really predictable self-storage is. So it kind of begs the question about with multifam, where the variables come in that are not as predictable. Is it just the human element? Property management. What are the biggies that you see that can sting you?
Well, I mean, in multifamily, there's so many variables, right? Is someone going to like the layout? Is someone going to like the selections? Is someone going to like the color of the paint, the color of the cabinets, the layout of the kitchen? And the thing to do generally in multifamily is to make it as bland or neutral as possible in order to not offend anyone, right?
Yeah.
And because, you got to make your product appealable to everybody. So maybe, for a while you put in gray floors that look like, stained wood, and then, dark cabinets, and then a, lighter countertop. And then in 2 years, it looks totally dated, and you have to go with stainless steel, and you have to go with wood and all this sort of stuff. So, all those factors make tremendous amount of variables.
Yeah.
And then, the layout, like what floor you're on, what amenities do you have, and your competition is all out there, right? So it's, if you're looking at different apartments, you can go and visit these things. And if one of those things bothers you, they're not going to rent.
Sure.
And or how much will you pay to repaint it? All these sorts of things. But then self-storage is like, do you want a 5x5 or do you want a 10x10?
Right.
But
Climate control or not, right?
Right. So what we try to do is solve people's problems. So the biggest thing that we're focusing on is like understanding what the challenge. Most people use self-storage because they're experiencing pain.
Mm-hmm.
Like, you're not buying or renting an apartment building because you're experiencing pain. Maybe you need to grow into a bigger place or something like that. But more than likely, you're looking to improve, and it's a good thing. You're like, I want to have a better living environment, right? I'm moving because I want a better living environment.
Mm-hmm.
And self-storage is like, I need self-storage because I have this pain.
Mm-hmm.
Like, if I didn't have this pain, I wouldn't need self-storage. And that, like 50% of our customers are residential and 50% are businesses. So the pain could be not having enough inventory, not having the ability to have stock warehouse. It could be any of those things where they need a temporary release for product, that they can put their product until they need it. On the residential side, it could be, I'm using my house differently now. With the pandemic, my house is now a gym. It's now a classroom. It's now an office. And I need to take that extra space for a dedicated X. So I need a place to put my stuff.
Mm-hmm.
So we're alleviating that pain. And so, are you going to use this daily? Are you going to use this monthly? Are you going to use this biannually? And so we can address, where we put someone in the building in order to, balance that level of pain with what they're willing to pay for it.
Mm-hmm.
So if they're only coming twice a year, put them on the top floor. They don't have to be right by the elevator. But if it's a business and they're coming every day, well, they're willing to pay more to be right by the loading dock.
Yeah. Yeah. Makes total sense. Yeah. The moving parts in multifamily are so numerous, and you highlighted them well. I did want to mention one last thing about, you brought up the recession resistance versus recession proof conversation. I've mentioned this a couple times, but listeners may or may not be familiar with the Sharp scale. And Sharp is spelled with an E at the end, somebody's name. And it's basically just a scale of volatility across commercial real estate. You can probably use it in other areas too, but so you've got industrial, retail, restaurants, hospitality, hotels, multifamily, self-storage, mobile home parks, all that stuff, assisted living. So basically at the very top of the Sharp scale, for highest volatility are in a recession, especially, are things like assisted living and retail and hospitality and hotels, right? The very, very bottom of the scale, there's three. There's multifamily, there's mobile home parks, and self-storage is the number one least volatile asset class in commercial real estate. And when you start to think about all the reasons that Scott just went through about the hows and the whys of that, it makes total sense. We still feel good about multifamily in that, in that whole picture, because it's the third lowest in terms of recession or in terms of volatility. So it fares pretty dang well, especially when you compare it to like a single family or something outside of the commercial space. But so for listeners, just kind of a note there that we're talking about a couple asset classes here that are really, really desirable going into an economic downturn or a recession or whatever, wherever we are right now. Scott, any thoughts on that before I ask you a few more delving questions?
I mean, part of that is when we look at the volatility of that, has to do with, obviously one is the capitalization rate, but also the other one is the housing starts. Since 08, 09, there's this huge deficit of housing starts. And the triangle that we've had since 2008, 2009 is just still tremendous. We still haven't caught up. So if we look at that, what does that mean? It means we weren't building enough houses. So that there weren't people that were able to move from an apartment to a house. And then when we then say, okay, well then the person who's in the larger apartment is not moving out, which means the person who wants a bigger apartment can't move into the bigger one, which means that they're staying in their smaller apartment, which means that the person who's now needing an apartment can't get a small apartment because they haven't moved out into the bigger apartment and the bigger apartment hasn't moved into a house.
Right.
And so when we look at that the lack of housing start has caused this huge pressure across the board, which is then one, raising the prices of apartments. But then now when we have these huge, massive upticks in the interest rates, people can't buy as much for a house. And so they're now being stuck in an apartment because they can't afford a house, which they could have a year ago. They could have bought twice as much house,
right?
Because of the interest rates. So there's a lot of volatility just within that bracket of that market. Yeah. So as long as we're in that deficit of housing starts, we're going to have this huge pressure on the demand for multifamily.
On that note, I just kind of a little bit of a side question. What do you think about, I mean, everything, I'm in Salt Lake City, but some of these really hot markets, the Austins, Dallases, et cetera, the only housing starts that you're seeing, at least especially in multifamily or Class A, right? That's all anybody seems to be building these days. Single family, maybe varies a little bit, but again, you're basically maximizing the value of what you can build and return. What are your, do you see a glut of Class A assets in the multifamily space as, a problem or emerging problem, or what are your thoughts on that?
Well, I think that's, what everyone wants to build, right? They're not going to say, I'm going to come in and build a Class C facility, right? And, we tend to equate Class C or D with, slumlording it. So like no one's going to take that amount of risk to build a high risk marketplace. So, what we're seeing, like in my community, Optima is building an apartment building in my community where they're going to be charging like $5,000 for a 2-bedroom, 1,200 square foot building. And I'm like, that's like greater than people's mortgage payments.
Yeah.
Like, why would you do that?
Right.
So to me, like that high of rent is just like, wow. But they think that they can get that now. And I mean, obviously I haven't been part of any of the underwriting. I left the company like over 25 years ago. Mm-hmm. But when I heard those rental rates, I was just like amazed that they're trying to get, $450 a square foot.
Yeah. Unreal. It must be a really desirable part of, is it Chicago? Is that where they're doing it?
It's north. But if I look at Illinois, the population of Illinois has decreased 10% for the last 12 years.
Yeah.
Annually.
Wow.
So like we lost our biggest city. We lost our next biggest city population wise that are leaving the country. So it's not like Austin or Texas where there's this huge demand. It's the opposite. Like the value of our homes are like staying stagnant. Mm-hmm. They're not increasing.
Yeah. Amazing. That project in particular sounds crazy. It sounds very, very risky to me, but I'm sure that there's a lot of big money behind it that's looked at it a lot closer than I have or we have. So,
it's totally a Class A. I mean, the whole building's glass and poured in place concrete, and just the amenities are over the top. It's a beautiful building, but it's certainly not a Class B. It's an A+ building, right?
Right, for sure. Well, let's get into the good stuff here. As far as you've got a really broad range of knowledge, across asset classes and a lot of experience. You've been doing this a long time through a number of downturns now. Where do you see opportunity either now or let's say in the next 6 to 10 months?
Well, we've been focusing on self-storage just because of the volatility. I mean, you've been hedging on it, and I think we're fully in a recession. In fact, a year ago, I did a speech in Vegas when I was presented with an award that how we were going into recession. Mm-hmm. And so we've been preparing for this recessionary market for, I would say 10 years now. Mm-hmm. And so that's what we've been doing. And that's where our focus has been.
Got it. The name of the show is The Apartment Guru. So what do you see in multifamily, even looking in from the outside at this point?
Well, I think there's going to be a correction in cap rates. So I'd be really hesitant, now that cap rates are below interest rates, we have that inverse. And so, I'd be really looking hard at what the true capitalization rate is and making sure that the numbers are good. And to me, the only thing I would be asking is what's my exit strategy? Mm-hmm. I think more than ever, you have to have a real focus on what the exit strategy is going into the acquisition. Because if you don't have that defined, like I'm just going to hold it and hold it and hold it, if you're typically buying at the highest point right now. So if you're looking at something, if you're buying at a 3 cap, how much lower is it going to go? For you to make money, right? Yeah. So that's why making your money on the buy is really important versus trying to make it on the sell.
Yeah, like now more than ever, doing really good, solid deals that. Ideally, this is me speaking. Ideally, they're cash flowing in place as is, and you're and of course the debt that you're able to get or not get on these things is often make it or break it as well, and that's such a weird scene right now with interest rates as high as they are. And what are you seeing on the equity side, even in self-storage? What are you hearing from investors?
Trepidation, concern about what's really going on in the marketplace.
Yeah.
Is this comparable to 08, 09? I don't think it is, because the underlying factors are different. But obviously when you hear banks closing, it's sort of like you get that twitch from, 08, 09, where haven't really worked through that scar tissue yet. Mm-hmm. So I think that there's a lot of trepidation in the marketplace, and there's a lot of hesitancy and making sure that the underwriting is very solid. So there's a reluctance to just move fast into something. They'd rather, take more time to evaluate and assess.
Mm-hmm. Yeah. Yeah. Well said. All right. Well, I gotta switch gears completely here, because you're, you have this conversation that I just want to share with the listeners about how to live a full life. And you've got 3 tips that experts swear by, and I can't let this opportunity go by without hearing that for myself and letting the listeners hear it too. And I'll just preface this by saying, to me, being a high-level entrepreneur means being the best version of yourself at all levels in all parts of your life. And so this to me is every bit as important as anything that we've already talked about today. But I'm really curious and kind of can't wait to hear your tips on this.
Well, the first one, people say, just get up early. If you start your day at, 5:00 in the morning and make your bed, then, you'll be good. I'm a big believer in getting up early. We get up at 5:30, but so, the last 2.5 years I was taking this leadership course curriculum, mm-hmm. and the first quarter, what we focused on was silence and solitude. Mm. And so for me, where we begin our day is walking on the beach year round in Chicago, and I'll paddleboard for 8 of those 12 months. And when I'm out on the lake, like today it was just absolutely glass. It's quiet. And I just sat, I literally stood there, not sat there. I stood there, not moving, and just having a heart of gratitude and thankfulness and in solitude, like getting away from the cell phone. And that's when that inner voice can become to the forefront of your ears, right? We tend to stymie that inner quiet voice through noise, through distractions, and all those sorts of things. So the first one is silence and solitude, getting up early. And then the next one is allowing a space for that inner voice to have the confidence to speak, but it takes a quiet heart to get to that. So that's number 2, is just creating that space where you can really listen to things and then hear from a point of clarity as opposed to a point of noise. Mm. And then the third one is just constantly learning and growing. So each quarter we went through 9 different ideas that we were focusing on. And each quarter we'd come into a Sunday afternoon, and we would have the first learning session, and then we'd be in silence and solitude to the next morning through breakfast. And then we'd have 2 more sessions, and then we'd have silence and solitude from, like 1:00 to 5:00. Mm-hmm. And then we'd have a couple more learning sessions. And then the next day, same in the morning. And then we'd be done by Tuesday in the afternoon. And so it was those point of reflections. And so as we're going through these different stages, that's where it was beginning to teach me on like how I can become a better leader by focusing on these things within my own heart. So, or my mind, so in each of these things, that was what, the learning environment was really critical. You mentioned mentors first. My first mentor was my professor. The second one was my professor. But since then, I've been in 3 different programs to learn more so that I'm constantly growing. So my business is not stagnant. If I had stopped learning, I would have died in 08, 09 because we wouldn't have adapted. I had a business partner at that point in time. He literally said to me, why aren't we doing what we've always been doing? I'm like, I can't get a loan. We can't get loans. No one's loaning. Well, why don't we just do what we're doing? I'm like, you don't understand. We can't do it. We have to change. He goes, well, I don't want to. Well, then go do what you're doing, and I'm going to go do what I'm doing because we have to change. I believe we have to change. He didn't want to do it. He's now out of real estate development completely.
Yeah.
So, and, here I am, over 25 years later, still trying to learn and trying to grow. So to me, that's equally as important as silence and solitude. And that's where these new thoughts, these new ideas can come to fruition.
Yeah, dude, I love that stuff. That's for me personally. I'm just a personal development enthusiast. And to me, the stillness, the solitude, whether it's meditation or some focused activity like paddleboarding or whatever it looks like to you, to get into a state of listening, like you said, to get into a listening space, man, that's powerful, because the small voice, the still voice in our head is really, really wise, and really that's where our intuition is. It's where, I think some really deep, powerful stuff about being the best version of ourselves that we can be comes from. I sat down, I just started journaling here in the last couple months. I'm 50 years old, and I've never really been much of a journaler at all. And for the most part, I've kind of had to make myself do it to get going. But I sat down the other night and I could not stop writing. Literally for the better part of 3 hours, I just could not stop writing. And it was so much clarity coming out. And it was a state of listening, right? It was a state of kind of just letting this stuff flow through me, and some really valuable personal and professional stuff came out of it. And so, and you mentioned leadership, like, listeners, like, just consider that no matter how you perceive yourself in this industry, like, you are a leader. You're a leader in your family. You're a leader in your community. You're a leader for yourself, right? Like, your primary relationship, whatever that looks like, being a strong yet also compassionate and reliable, and a leader that people can get behind, and elevate themselves by being in your space. Like, that's really juicy. If for at least for me, it's been incredibly fulfilling to get to play that role in people's lives. So what, in terms of, Scott, you wrote your book. You seem like the kind of guy that is not just in it for yourself, right? So you're all about the learning, the continue to learn, personal development. Do you have plans, or are you doing anything now in the way of, like, say, thought leadership? Obviously, you're doing these podcast appearances, which are incredibly valuable. What other stuff might you have in the works at this point?
Well, I'm taking some time to evaluate that. So, one quick comment back to that quiet space.
Yeah.
For those who doubt it, how many times have you woke up in the middle of the night with an epiphany? Yeah. And you're like, and you should have written it down, and you woke up in the next morning, you're like, oh, what was that thought? That's the stillness right there, right? That's the beauty of that. That's the environment which allows that inner quiet voice to come to the fruition. Is, in the middle of the night when you wake up and you're like, you have this eureka moment, right? That's like the golden choice of that. And I can't tell you how many times I've woken up in the middle of the night, and I cannot fall asleep back again because of these sort of thoughts. Mm-hmm. And so for me, that's rather transformational. So where am I going with that? I took a step of faith and ran for public election. I lost by 200 votes.
Oh, wow.
So that was an effort I made. And I said, hey, I'm going to take this step in faith and see if I win. Mm-hmm. It's not something that I, aspired to be, a politician, but I thought it was an area where I could serve and give back to the community. Mm-hmm. And, the community said, we like you, but not like you enough in order to do this. So, all by, less than 1% I lost by. Wow. So with that, I don't know, because I'm in a new stage, right? So I have to take some time and evaluate it.
Yeah. What about real estate? Are you underwriting stuff? Are you in acquisition mode? Where are you with that?
We are in the development of a brand new concept, which I can't really get into too much detail in a public forum like this. Sure. But we are, coming up with some new ideas on how to approach real estate.
Nice. Can't wait to hear more about that as it develops. Awesome, Scott. This has been so good on a lot of different levels here. What's the best way for listeners to learn more about you and get in touch with you?
Thanks, Tate. If people want to reach out and learn more about self-storage or how we compare it, if they reach out to us at info@CODA, CODA, MG for management group.com, info@CODAMG.com. We will give your listeners, if they mention this show, 2 free things. One is a feasibility study, which we did for our project in Dayton, which describes the self-storage market as well as the market for that specific location and why it was a good reason to go into storage there. Mm-hmm. But we'll also give them a self-storage deal analyzer. So that way they can compare, your multifamily to your self-storage and the expense ratios and stuff like that. Wow. So, expense ratio for multifamily should be like 50, 55%. In storage, it should be like 25 to 35%. So, there's some significant differences there. So we will give both of those. And if they want to reach out, they can email us and we can set up a meeting. If they feel they have a property or a deal or have questions about it, we'd be more than happy to take some time to discuss those.
Awesome.
So those are a couple of things for your listeners.
Appreciate that. Yeah. And any other specific ways to reach you, social media, anything like that?
That's the best one.
Yeah.
All the rest of them are really designed around the one-stop self-storage to feedback on those specific products.
Perfect. Okay. Listeners, there you go. So really valuable gifts. I mean, a deal analyzer, you probably have thousands of hours and dollars into putting that together. So, super valuable. Well, Scott, thanks a ton. This has been very enlightening for me, and I'm sure the listeners really appreciate you being on the show.
Thanks for having me. I appreciate it.
Yeah, you bet. And listeners, thank you. You've listened to the end of another episode of the Apartment Gurus podcast. We appreciate you guys so much, and look forward to seeing you again on the next one. We're doing 2 a week as always. And so just in a few days, you'll get a brand new episode. So thanks, everybody. Have a great day.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.